Hello, everybody. Welcome to Equity Tracker SGX night. Just a quick sound check. Can you hear me loud and clear? If you can hear me, can you just simply reply with a yes? Welcome everyone, and please do not feel shy to share our live tonight. We will share about what is happening in Singapore stock market and how can we as an investor take opportunity in Singapore stock market, and what are the stocks we're going to can looking at. Okay, I hope you guys can hear me. All right, thank you, Christine. Thank you, Penny. All right. Actually, before we start our event, tonight our topic is actually unlocking opportunity of key sectors and stocks on the Singapore Stock Exchange, right? But first of all, before you can invest in Singapore stock market, you must have certain platform, all right, to invest with. All right, you have to open an account first before you can actually participate in Singapore stock market. So, and tonight we actually have a special guest from M Investment Bank. Julian going to share with you guys the current promotion, and there are some promotion offered by M Investment Bank to all the investor in Malaysia. Um, let's invite Julian.
Hi.
Hello, hi.
Thank
Hi,
you.
Julian.
Okay, so hi everyone. Good evening. So I'm Julian from M Investment Bank. So I'll be doing a brief introduction about my company's platform, which is the M Equities platform. So M Equities, we are one of the brokers tied to M Bank. So we are one of the oldest brokers in Malaysia. We are established in 1975, and we have won several awards over the past few years. So in short, what we are offering is we can offer a very low brokerage for the local trading, which is 0.05% or minimum of 8 ringgit for our cash upfront account. This can give you a trading limit of 99%. And currently, based on for the cash upfront account, you earn about 2.15% per annum on the daily rest. Basically means you have any excess money in the account, you will get this kind of interest rate based on your excess. So not delivering further, this will be the brokerage for our Singapore trading, which is at 0.35% or minimum of 25 ringgit, 25 Sing dollars for trading value below 100,000 ringgit. Anything above 100,000 ringgit will be 0.25%. The rest of the fees will be the Bursa stamp duty, the SGX clearing fee, SGX trading fee, and settlement instruction fee as per this slide here. So for our trading, we have our platform. We have live prices, and it can trade fully online. So for M Equities, once a while we will do webinars for our clients also. In fact, our next one will be tomorrow at 12:30 p.m. And we also have a Telegram page where we pitch our stock ideas and coverage on the local shares. And we also have an app. Currently, for foreign trading, we provide trading for up to about these 12 exchanges. And for online trading, it's available for Singapore, US, and Hong Kong currently. And we are still looking to expand further on the coverage. So if you are interested, you can join our Telegram page through this QR code here. And you also can scan this one, the middle one, to open a trading account. For the right one is for the terms and conditions. You can also contact me or any other our dealers here. Our phone number is here to open an account. You can just WhatsApp us, and then we will follow up through there. Just have to give the details, and then we will do the account opening for you. So, any questions from the floor?
All right. Feel free to contact Julian and his team, Edison and Gina. I think M Investment Bank is actually very established in when you want trading overseas. And also they have a pay interest for the daily rest basis if you haven't outstanding amount in your accounts in cash. So if you got any questions, welcome to put it in the comments. And Julian, we're very happy to help. And just maybe you can go back to the previous slide so that they can scan, and there are few chats groups that actually you can enter to learn what is the latest insight and then the research done by equities, right? So you can utilize their resources to make your informed investment decision as well. All right. Receive no question here. So yeah, anything, Julian? Okay.
I think that's all. Anything can WhatsApp me at this numbers here.
All right.
Great. Handing back to you.
Okay, thank you, Julian. Okay, let's come to our topic tonight, right? Unlocking opportunities. First of all, I forgot to introduce myself. My name is Christopher Tan. I'm an analyst at Equities Tracker. It's an asset management company that I got a license from Security Commission Malaysia. And we also have an education arm and also data platform. Basically, we have both Malaysian market and Singapore market as well. So tonight, our focus will, talk more on the Singapore stock market, and basically in tonight we will share like why you should start investing in Singapore stock market because it's actually uh, offer you quite a lot of different kind of opportunities and different kind of sectors of the company that listed in their stock exchange and that offer quite interesting yield as well, right? My objective tonight is actually make sure you walk away with something, basically learn something from know more about single stock market. And what we're going to do tonight, actually later on the later part, we will touch a little bit on the stock picking and stock screenings exercise, which will use our Equities Tracker data platform that available for everyone for free. So for those who have zero knowledge, don't worry, we'll try to simplify as possible. And for those who have experience in investing in Malaysia market, if you haven't do it in Singapore, feel free to think about it because it's actually there's a very good chance to some banking stocks, or there are a lot of companies that are actually quite cheap in Singapore, right? Okay, before we start, first of all, we have to share this disclaimer, and this is purely for educational purposes. It's not investment advice. So do consult your licensed financial advisor or your brokers. Yeah, basically, in this investment webinar tonight, we will normally talk about stocks. So by no means there's any mean of the buy and sell recommendation. So don't go and buy of this stock, and if you lose money, you cannot blame us. Okay, firstly we're trying to share why you should start looking at the diversifying your portfolio in Singapore stock exchange stocks, right? Even before you even you have zero experience in investing, you probably can also learn about Singapore stock market, and maybe in the later on you have the chance to invest in Singapore market. There are some benefits if you are having your exposure in Singapore market. Actually, we shared before in a few past few sessions. There are certain advantages of investing abroad, mainly because it's diversification, right? Basically, people are saying don't put all your eggs in one basket. So for Singapore, basically the economy actually relatively stable, and they are quite developed economy, which actually can provide a favorable environment for investor. And actually, especially they have a quite a strong financial infrastructure, and their regulatory frameworks is actually also very established. And also, don't forget that Singapore actually has this advantage as a financial hub of ASEAN. So as a financial hub in ASEAN, this is actually attracting more capital, more business and investor, and actually can contribute to the more diverse and dynamic stock market in basically you can see more businesses that coming from different country listed in Singapore Stock Exchange. And the number three very important point is currency stability. The Singapore dollar is known for its stability. Actually, this if you're investing abroad, right, which is normally people will face the foreign exchange risk, right? Sometimes you want to invest in a currency which is stable and actually can appreciate over time because you can meet from the capital gain from the stock that you're investing in and also the the currency appreciation. So you make both side, right? So Singapore Stock Exchange actually offer this kind of opportunity. And also number four actually is SGX is also as a very well regulated market. Yeah. Okay, number five, they are actually exposure to different sector. For example, Malaysia's we have a number of sectors that Singapore do not have, but Singapore also have certain sector they are actually Malaysia do not have. Basically, because they're coming from the the other parts of the world. For example, they even have this data center rates, right? They are also property real estate companies based in Hong Kong or in Indonesia, all right? So this is where our Malaysian stock market that do not have this kind of company. If you think like let's say Hong Kong property price can continue to go up in the long run, then you can have this kind of exposure in Singapore Stock Exchange. Right, of course, there are also flip side of the coin. There are certain concepts that maybe they are limited market size. Sorry. Right. Because in terms of the number of companies, right? In terms of number of companies, Singapore stock market actually relatively smaller compared to US and China. Even the number of listed entities in Singapore stock market is actually lesser than compared to Malaysia. In Singapore, there are around 600 over companies, both including their main board and catalyst board, which is our Malaysian. You can think like something like S market, where in Malaysia in total we have about 900 to 1,000 companies. So, but then in terms of the overall size, right, the market capitalization of Singapore stock market is actually larger than Malaysia. Even they have a smaller number of companies, right? Later I will share more detail. And also Singapore economy actually highly influenced by the economic activities and regional economic condition because Singapore is actually quite a small and open economy and it can be susceptible to external factors such as the trade tension and the regional economic downturn. They are, of course, even though they are very stable Singapore dollar currency, when you invest abroad, there are definitely involved some of the currency risk. Yeah. Okay, since we are talking about slightly on the currency risk, but then if you look at the previous past 10 to 15 years chart of Malaysian ringgit versus Singapore dollar, there's almost like one-way streak, down south from, in 2008, if you are Malaysian working in Singapore, that time you are getting $1 transfer back to 2.2 ringgit. And now in 2024, it's actually almost $1 to 3.5 ringgit. It is actually almost ringgit depreciation at a annual rate of around 2 to 3%. So, yeah. Unfortunately, although our bank, the government of Malaysia, saying that actually our ringgit does not reflect the fundamental of our Malaysia economy, but then there are the continuously weaknesses seen in ringgit also show they are actually fund flow flow out from the Malaysia economy as well lah. Okay, so maybe some people are, I may ask, all right, what's the reason that ringgit has been continuously weakened compared to Sing dollar? Maybe so, I would say this could be one of the reasons. Not the main reason, but maybe one of the reasons. Every economy actually print money, but whether the country's currency can be actually influenced by the money supply, that how much money they print over the years. So in terms of the growth rate, right, Singapore's economy actually quite they are control their money supply. So basically, for the past 20 over years, right, they are printing at the rate of 6.7% growth rate every year, which means they are printing 6.7% more compared to last year throughout the past 30 years, every single year, right? It could be substantial, 6.7%, but look at, if you compare against Malaysia, what number is even higher at 9.2%, right? Compound annual growth rate, KGA, right? Basically, our money supply will be double in every seven years, right? Right. Now 8 to 9 years lah. Okay. So what happen if we print more money? Normally in economic, we normally will say, if a country central bank prints more money, right, it will increase the supply of money in circulation. When more money is available, each unit of currency become less valuable because there is more of it, right? And also there are an impact on the inflation expectation, because if you print more money and more money chasing for the same amount of goods, and that will drive the price of the goods go up, and eventually will decrease the purchasing power in the future. That's why actually money will flow out if you're actually printing more money over the long term. Okay, basically I will actually share in Singapore market already. There are two boards, right, where company will, when they list, when they are doing their IPO, right, initial public offering, they are basically only two destination. They can only choose either go to main board or they go to catalyst board, right? But of course, it's like Malaysians, there are certain qualitative and quantitative criteria that have to be met before you can participate in main board. If you think about quantitative requirement, if you want to list in main board, there are certain quantitative requirement. For example, your last financial year net profit, pre-tax profit, must at least of 30 million Sing dollar, right? Where also you also have at least 3 years of operating records, and once you list, your market cap have to be at least 150 million Sing dollar. Whereas if you list in Catalyst, there's no such requirement, which means you can actually encouraging more small and SME kind of company to list in Catalyst, which is at a growing faster pace. Of course, sometimes you bring higher risk because companies may be not successful over the years. And some of the difference in terms of issue price, if you list in main board, you have to be at least 50 cents Sing dollar, and also for Catalyst only 20 cents. In terms of the public balance free float, which is the number of shares available in the public hands, is actually main board is around 15 to 20%, depend on your market cap. Whereas Catalyst has actually lower requirement, only at 15%. That kind of liquidity in the market. As the current number of companies in main board is around 400 companies, 400 plus, whereas Catalyst is about half of it, about 200 something companies actually listed in Catalyst board. Okay, one important thing is actually, if you look at the overall all these 600 company in terms of their valuation and all their price, if you sum it up with what we call market capitalization, right, is how much the all the companies worth in Singapore stock market. In terms of the data that I can get is actually as at December last year, Singapore stock market, actually their stock market cap is around 600 billion US dollar, right? 600 billion US dollar. If you compare to Malaysian, our KL SE, right? Our Malaysia overall is around 370 billion US dollar, right? Although we have more number of companies, but actually in terms of the size, we are smaller compared to Singapore, right? Okay, so if you want to know more about SGX, right? That first of all, people, if you are a fund manager, I want to have some exposure overseas. Normally, right, how you measure a performance of a stock exchange, for example, in Malaysia, KLCI index should be used to measure what is the performance of Malaysia stock market indexes. Right, KLCI is actually constitute of 30 companies, whereas Singapore Straits Time Index is actually used to measure Singapore stock market performance. All right, if we look at detail of the what STI is talking about, right? STI actually consists most of it actually there are three banks inside, the DBS, OCBC, and UOB. But then these three banks actually constitute about 46% of the overall weightage of the index, which means these three banks, if their share price go up by 10%, the whole STI index will be moved by 4.6%, right? In a simple term lah. Okay, so it's very, very significant to influence what is the STI is going to where they are going to go, right? If for Malaysian, Malaysia economy, our KLCR is actually also share some kind of similar trend where we have a lot of banks, right? Basically, we have around 8 commercial banks in Malaysia, and we have Maybank, CIMB, RHB, Public Bank, M-Bank, all right, a lot. Whereas Singapore only have 3, right? You can imagine how big is the size of these 3 banks. Whereas we also have in Malaysia, we also have plantation company, which is constitute the second largest part of our stock market. But then Singapore actually quite evenly spread. They have around 13.9% is coming from industrial sector, and REITs they have 12.8% of the weightage is actually coming from real estate investment trust. That's REITs, where in Malaysia we do not have this. KLCL we do not have REITs. Consumer 7.6%, real estate company 6.4%, and telco 6.1%, and 3% is the aviation, Singapore Airline, right? So in tonight, if we are trying to look for opportunities, right? If you want to go overseas, right, to invest, the safest bet actually we say you would like to look at banks first for Singapore market, because banks is actually very good business model that offer recurring kind of income for investor. Basically, banks is a very well regulated industry that will monitor by central bank of the country, and also very high barrier for entry. For example, you cannot simply anyone ali account mutu to open banks to compete with existing player, right? You have to have the license, have these networks, and have the branches, and have the money to open a banks. So banks actually have a very high barrier of entry, a very wide economic moat. So basically, it's no-brainer to look at banks in Singapore. First, then we can talk a little bit more about banks. Basically, we shared this before. They are considered of 46% of STI index. They actually generated quite a substantial number of monies income, like 17.9 billion of net profit, and pay more than 10 billion of dividends to their shareholders. And without mentioning this, actually Singapore is actually a central hub for financial center. Basically, they rank number 3 in terms of globally, and also in ASEAN they rank the number 1 ranking in terms of the financial center index by this Z and Yen Institute. Okay, in terms of the asset size, who are the largest in Southeast Asia? The 3 banks listed in Singapore actually rank number 1, 2, 3 in Singapore, and of course even the ASEAN banks, they are the largest by total asset, right? In terms of the top 3 banks in Singapore, the total asset is 1.2 trillion US dollar, right? 1.2 trillion US dollar versus Malaysian Maybank, CMB, Public Bank. Our total asset is around only less than half of it, 473 billion US dollar. So if we add up Maybank, CMB, and Public Bank, our size is 473 billion. We are still smaller than DBS Bank, right? So you can have the sense of the size of the Singapore banks, how big is their operation and business is. So having a larger total asset base for banks is really beneficial for banks, is because you have a larger base of total asset. You will be more diversified across all the industry and sector, and when you're doing some provision or impairment, your liquidity position will have a better situation when you're facing when you sometimes you need to impair, because you have a larger base of customer. Okay, these are top 3 banks in Singapore Stock Exchange: DBS, UOB, and OCBC. I hope you guys follow me so far, and feel free to type out your questions if you have any. I will be more than happy to answer your question. Okay, since we are talking about top 3 banks in Singapore, their actually potential offer is a very good asset base in Singapore, and we also have exposure across Southeast Asia. The largest bank is actually DBS in Southeast Asia. And you look at what DBS does in 2023, their performance is actually very good. And basically all 3 banks in Singapore, like DBS, UOB, and OCBC, these 3 banks is actually hit a record year for all 3 banks. Last year, they actually have achieved the highest ever record of their profit and also the total income. So it's doing much better. So for financial year 2023, for DBS, they actually made a net profit of 10.3 billion. It's a record net profit. And also dividend and also the return on equity of 18% is all at a record level, which is they are actually doing much better compared to the past few years. But then I don't see their share, even their financial and fundamental numbers actually at a record year. Their share price actually still lagging behind. You do not see their share price at a record high level, which means that somehow will showing you a divergence. If I value investor, normally we will look at the price and value divergence, where the company continue to deliver value, but the price haven't catch up to the value. Still see a gap to make kind of profit. So in terms of dividend, last year, 2023, they paid around $1.92 of Sing dollar of the dividend per share, versus 2022 of $1.50, which is a 28% increase in terms of the dividend. And meanwhile, they also announced a 1-for-10 bonus, right? Which you will get an extra 1 shares, right? For their for the investor, if you hold every 10 shares, you will have additional 1 shares. And then if you calculate, they also announced a quarterly dividend per share of 54 cent Sing dollar. If you analyze it, which means multiply by 4, because they announce every quarter, it can represent $2.16, which means is another 24% upside compared to 2022, right? Which offer a very attractive yield for their investor. Their investor will be very, very happy, and because the dividend yield they offer for DBS is actually 7.5%. Okay, will their financial number and their result be sustainable? If you look at the company, the CEO actually share what is the outlook for the financial year 2024. This is what I extracted from their presentation slide, and just share with you guys what is their tone from their CEO, what they're looking at, how they're going to deliver their result in 2024. So basically the overall outlook is actually still quite positive. Whereas their fee income, I think the fee income growth to be double digit is actually very important, because bank actually make money from both interest income and fee income. Firstly, they mentioned that they have maintained their guidance for net interest income to be around 2023 level. Okay, which means half of their business actually can achieve what they achieved in 2023. But then the second half of their business is fee income, which is not interest related. For example, they charge you for the asset management, and when they do broker services, or they have advisory business, right? That is called fee income. The fee income, they are trying to achieve a double-digit growth in terms of the fee income. Which overall, that could be another record year in terms of the absolute amount of their net profit for 2023-4, right? Okay, and this is cost income ratio, which means that this cost compared to their income. Of course, you want to keep your cost low as much as possible. So this ratio is actually the lower the better. To be in the low 40 range, right? If you compare against Maybank or CMB, our Malaysia's largest bank is actually around 49 to 50 kind of cost to income ratio. So which means DBS Bank is actually leaner, although they have a larger asset base. They are leaner compared to our Malaysian banks. Beside public bank, our public bank has actually have the lowest cost to income ratio, with around 30% only. Okay, this I can point your attention to this where my cursor is this ROE expected to be guided range of 15 to 17%. Right, this is a very, very commendable number of 15 to 17% return on their equities. Right, because they are as they are continuing to make profit every year, right? That profit will eventually flow to become their shareholders fund, or their shareholders the equity portion, where they normally will use this equity or shareholders fund to pay as a dividend, right? So it's very important to continuously grow your equity base or shareholder fund, right? So they are seeing making a 15 to 17% growth, return of equity of 15 to 17% range. Again, if we compare to, let's say, Maybank, Maybank last year is actually also a record year for Maybank, and they have a very first out of so many years, they actually achieved a double digit of ROE at like 10.8% of ROE, 10.8, slightly less than 11%. If you are having any numbers of return on equity more than that, like 11 or 12%, you are actually very profitable business, very well managed kind of situation. Okay, so if you look at the second bank, UOB Bank, what they did in 2023, last year they also record core net profit. Basically, their full year net profit actually grew by 26% year on year. It's actually their fourth quarter result also in quarter on quarter basis also increased by 1%. And in terms of the interest they making from their borrowers, is actually net interest income grew by 16% year on year. And the fee income, they also grow by 4%. Their core cost to income ratio also quite commendable at 41.5% cost to income ratio. Yeah, this I won't explain every single ratio because sometimes it can be very technical for you guys. But then in this side is a liquidity ratio where the higher the better, which means it provides certain buffer if the banks facing certain crisis. How much is their equities can able to cover for the losses of their equities. Right. In 2024, their outlook is actually also quite positive. They actually focus on their interest income, and they are expected to grow their loan base for low single digit, and also a double digit fee growth, and also total income to see positive growth as well. Right. Which means 2024 could be another record year for UOB Bank. And OCBC, another solid year for OCBC, considering year of record net profit. Yeah, basically the same trend across three banks. And looking ahead, what will happen in 2024 for OCBC? Their outlook, the global growth anticipated to slow down for 2024, but they expect Asia to perform better. Interest rate to trend downward, likely to from second half of 2024. This is their forecast from OCBC, and their economists also think that the global inflation likely to remain sticky in the near term. They will continue to stay vigilant and nimble amid increasingly complex market and geopolitical environment as well. Their target for 2024 ROE between 13 to 14%. The NIM is actually net interest margin, which is the margin they make from the interest they charge. For the difference of the interest they charge between the borrower and the depositor is ranging around 2.2% to 2.25%. And they're also seeing a low single digit loan growth and the credit cost between 20 to 25 basis point, and maintain a 50% dividend payout ratio target, which means every single dollar they make, they're going to pay you 50 cents as a dividend to shareholders to reward their shareholders. Okay, in terms of the metrics, right, to compare against our Malaysian banks, Singapore Bank actually do offer quite a decent attractive valuation looking at some of the ratios. But then if you look at the price to book value ratio, our Malaysian banks are still relatively cheaper in terms of every single dollar of asset in balance sheet. For example, CMB Bank is actually trading at 0.9 to around 1 times of their book value, whereas all three Singapore banks is trading at slightly premium compared to that book value. But then why investor would like to pay for premium versus their book value is mainly because I think most of the Singapore bank actually deliver higher growth in terms of their profit for the past many years. If you look at these metrics that I'm pointing to you right now, this earning per share 5-year growth is actually how much the banks actually grow their earnings for the past 5 years. For every year, actually DBS make a 30% improvement in their earning per share. And UOB is 6.2% and OCBC 5.9%, which is all three are higher than Malaysian banks, which means their business is growing at a faster pace. And in terms of the yield, they are also quite a decent yield. Maybe after the declare of their bonus and the dividend of a DBS bank, this could be even higher at 7.5% dividend yield. And the ROE is a very important measure for banks. The return of their equity to the shareholder is actually 18%, one of the highest in the industry. And I think they can be, I think, in the top 10 globally, right? They are one of the highest ROE globally in the top 10 players. Okay, maybe I will touch on some of the REITs before we go into our equity tracker data platform to share actually what else you can extract some of the value from Singapore stock market and where to find gems or potential undervalued companies. As I mentioned, Singapore SCI index also constitute like 12 to 13% of the constituent is actually from REITs. And Singapore market is the largest REITs market in Asia ex-Japan. There are 42 Singapore REITs listed in Singapore. It's a very important to the stock market because look at the overall market cap. 12% of it is actually under REITs, right? Contributed by REITs. Whereas in Malaysia, we only have 2.4% REITs. We have only less than 20 REITs listed in Bursa Malaysia, whereas Singapore have 42 REITs, right? And there are all these REITs in Singapore, their assets actually across the world, right? Distribute at least 90% of their income to the shareholder, and also you can have some exposure to the global real estate because over 90% of the Singaporeans own the properties outside of Singapore. That is how significant it is for risk in Singapore. And this will be the breakdown of the REITs subsector. You can see out of the 42 REITs in Singapore, probably their industrial REITs is like 20% from the 42 REITs. There are also hospitality REITs, diversified REITs, retail REITs, office REITs, specialized REITs, and healthcare REITs, right? Okay, now we can actually spend some time to go into our platform, sg.equitytracker.com. If you have a laptop with you, you actually can go into your Google Chrome or your browser, right, to type in this sg.equitytracker.com. It's a totally free website for everyone. When you try to go into before you invest, basically in the stock market, you are actually fighting against every single investor in the market, right? If you are fighting and in the war, you need to have certain tools, right? You cannot have just empty bare hand and go and fight with other people. So this will be your tool available for free. I think our colleagues actually put that links in the description in the comment box. You can just click and see. Basically, we actually have the certain automated generated ideas that we can classify certain features in our website. We have this rising star, dividend king, moat defender, cash holder, and continuous hero. What is they have this description, and maybe tonight we're going to touch some of the company in rising star. Because this rising star actually shows some of the companies that actually have their net profit grew over the last 3 to 5 years. It can implying the improve in the company or the industry performance, right? If the best, if we can find a companies that they have continued to deliver better and better profit, but then the share price haven't reflect in their fundamentals, right? If you're an investor, you want to go in Singapore, all right, if you do not have this kind of tool, right, how to filter 600 companies and look at, what are the companies actually doing for the past 10 years or even more, and are they improving in their profit or their dividends? So basically in our tool or sg.equitychecker.com, we can provide you just a few clicks, and we even automated the ideas for you. Okay, let me share my screen. Okay, basically this is what you see as a sg.equitychecker.com. Right. Okay. Feel free to explore yourself about our website. But then in tonight, we will just straight away go to the stock search. You can see here there is a explore stocks, right? Just click on it. We have a stock selector. Basically our system actually covered all the Singapore stock exchange stocks, and it's powered by our advanced algorithm, and no logins is required. So which means that you can share to your friends, your families, that everyone that you're interested in buying Singapore stocks. You can look at all this data for free. Okay, the first part, actually this part is actually based on more on the tradings, technical charting parts. But what I'm focusing for tonight is actually on the investing idea that based on fundamentals, value investing methodology. Okay, as I mentioned, I will focus on rising star. Just click on the rising star. Maybe I zoom in a little bit. Okay, as you can see, the last updated data is actually on 14th of March, 4:30 p.m. I think 13 today. I think that it's actually we update it daily. We update it daily. We will sort it by 3 years of net profit growth and 3 years price growth. All right. Basically, we can compare their 3 years net profit growth versus what is the reaction of their share price for the past 3 years. But then, if you think about it, currently we're in 2024. Somehow the audited data, we only use audited financial number. And all this audited financial number actually is a lagging indicator. And somehow in the system we haven't because they haven't updated, and we also require some time to key in all this data. So some data is actually available up to 2022 or 2023 only. But then if you compare against the past 3 years, right, which means we are comparing the numbers against COVID period, which is a lockdown and nobody can do. You are impacted by all this COVID COVID-19 measures, right? So the best is actually we can use compare against over the last 5 years. Okay, our criteria for tonight will show compare over the last 5 years, right? To give a better comparison, because against numbers of their pre-COVID, right? Instead of the year of COVID as a base and compare from the COVID year. Okay, you can click on the show row to show like hundreds rows at a time. Okay, so why you're seeing this, like, okay, you already instantly you can observe some of the very good companies that showed up in this list. For example, did CMAC Limited, right? Their current market cap is actually 399 million. But then if you look at their latest year net profit, they are making a 57 million in the last financial year. Compared to the year before that is 50 million. and the previous 2 years before that is 34 million and 17 million and 6 million. What you are seeing is actually over the past 5 financial years, this company able to make from 6 million to 57 million in terms of the profit, which is they grew almost about 10 times their in terms of profit. And in this case, actually 849% for the past 5 years profit growth. But then if you look at their share price for the past 5 years, the absolute return from the base year here, actually they only growth by 37%, which means somehow it could be a price value divergence happen here in this companies, right? So it could be a potential reverse in their share price to catch up the surge in their earnings, right? So which means we as an investor can potentially benefit from the revise of their share price to reflect the growth in their earnings, right? You can have a lot of companies that showing a similar trend. For example, like this Kyungwoon. Let's say look at this. Okay, the second company TYE Sun Limited is a company involved in auto, truck, and motorcycle parts. Right, basically they turned around from a loss of 1.1 million to become a net profit of 6.4 million. Right, they successfully turned around, and all these companies actually showing improvement in their result. Yeah, you can take your time to slowly to explore. Okay, for this, I will use the SIFMAC Limited as an example. Just click on the name, and what you will see is the overall company overview in their description. What is some of the statistics available in what their company is doing? Essentially, they are companies that provide construction and engineering services to the energy, resources, infrastructure, and marine and defense sector in Australia, right? They will fabricate projects such as structural steel, plate works, tanks, vessel. Okay, blah, 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 blah. You can read, right? So, very long description. And we have updated their share price daily. There are also others metrics in the right hand side. Basically, the company is actually currently trading at a 7.14 times of their earnings, right, compared to the price. And they offer their investor at a current dividend yield of 6.79%, which is, I would say, quite decent if you compare against the current our FD rate of around 3 to 4%, right? They are this company actually offer you double of the yield that the banks are offered to use. And the share price currently is at not yet achieved the 52 weeks high. The 52 weeks high is actually 0.845, and the low is 0.665. The current price is 78.5, 0.785, right? Okay, you can click on the financial to study further on what is the history and track record of the company. Basically, the data is available since 2013. And you can look at what is their turnover numbers, and basically they are making 405 million Sing dollar of revenue in 2013, and last year they're making a double of what they are done in 2013. In terms of profit, they are making 36 million at 2013, and this the last financial year they are making 57 million. You can see that actually there's a drop from 36 to 6.75 in year 2019. Right. But then they actually surged from 2019 onwards, right, to 57. They also changed their currency from Sing dollar to Aussie dollar. Right. Basically, you have to convert it. Okay. So if you look at scroll down, you will look at the company. What is their cash flow look like? You can see the company from their operating activities. The cash flow actually generated from from 8.6 million to 95 million, right? Which is quite a healthy cash flow position. And throughout the past 10 years, right, there are only 2 years that are actually negative operating cash flow. This is what investor will it's a very important metrics that actually investors should look at, because the company eventually will need cash to sustain their business and pay for their creditors and debtors, pay for the suppliers, right? And scroll down some more is actually their balance sheet. If you look at these numbers, it's actually they have a positive net current asset, and you can compare against their overall current asset versus their current liabilities, right? Because the current asset is what you are getting in cash. It will be converted into cash within a year, whereas the current liability is you need to pay within a year. So in this case, the current asset is obviously more than their current liabilities, and about have 83 million surplus. Yeah, they're also growing their long-term asset. Okay, so if you look at the past 5 years, that number is actually growing quite significantly. But then if you look at their share price, what they the share price the market is giving to this company, Sysmac. If you look at the chart also, right, is also updated daily. Compared to past 5 years, 2019, right? The share price only, during 2019 times is around 50 cent, around 50 cent, 40 to 50 cents range. But then, although their profit has grew by 8 times, but then their actually share price didn't. They're only growing from 50 cent to around 78 cents. It can potentially signaling that this is a price to value divergence, right? The market haven't actually re-rate this company to based on the profit number, right? You can actually go back and explore every single companies. For example, this rising star, right? We actually already show you that all these figures, right? And this is just a first filter for you guys. And of course, you have to take into consideration is you have to, before you invest, make sure you understand the fundamental parts of the business. What is their business model? How is their management? Is it trustable? All right, the credibility of their management, and also the sustainability of their business over the long term. And basically, you understand every single thing of your companies before you invest. And you can use this variable for free, absolutely. I think you don't need to go out and searching for other tools that have to pay, right? And this software itself actually offer you a very insightful source of information for the past 10 years for your companies. We have other stock selector as well. We have Dividend Kings. If you are keen on getting a stable and recurring dividends, you can look at some of the companies in this Dividend Kings, and some of the companies that provide you a very healthy profit margin is Mode Defender. And what are the companies that actually hold some quite a substantial number of cash, and also what are the companies that actually continues deliver an uninterrupted profit, dividend, and operating cash flow of 10 years or more. Right? If you are traders, you also can look at some of the lists in our tradable stock list: rock bottoms, uptrend support opportunities, downtrend oversold opportunities, uptrend overbought alerts, and downtrend resistant alert. A lot of information can be extracted from this website. So we as equity tracker, as a data provider, is actually help you to stay updated on Singapore market insight and events lah. So please feel free to follow us. Can go to Facebook to search for some of the our group. Okay, basically in our Facebook, or I can search Singapore Market Campus to join our Facebook group to learn together to get a latest insight from the Singapore market. Right. I think my presentation is almost an hour. Okay. Before I end my presentation, maybe I can make an announcement. If you have any questions, feel free to insert in the comment. Right. Basically, I will announce this a very important thing. In this Saturday of 16th of March, in our equity tracker office in Petaling Jaya, we will have this physical session of we call it SGX Learn and Win session. Basically, you can come to our workshop to learn from our very experienced trainer, right? And also during our learning, you can have the chance to participate in our lucky draw session. And in each our workshop, right, we provide 5 prizes. For example, the first, you can come to participate. The first winner can get a 1,000 ringgit cash voucher. Basically, 500 Aeon gift voucher and 500 Touch and Go top up, right? And also we have second prize 300 ringgit Aeon gift voucher and 200 ringgit top up, which is 500 ringgit in total. And so we have three third prizes, which have 3 winners can walk away with 100 ringgit Touch and Go top ups. So each session we have 5 winners, and out of this, we have 6 events in total. If you have attended at least 4 of the session, you can entitled to have a special lucky draw to win away with an iPhone 14. So if you have you are free on this Saturday, you can always register. You can using the link that our colleague has posted to register yourself to attend our this coming Saturday workshop and our equities tracker office in Symphony Square, Petaling Jaya, right? That will be my last slide and my last sharing for tonight. So thank you. If you got any questions, I'm very happy to answer. Okay, I think I haven't received any questions, but then I will always be available. If you have any questions, just look at drop us a comment in our Facebook. We're very happy to answer. And for now, we do not receive any questions. I think it's about time. And thank you for participating for the whole session for tonight. And thank you for staying with us throughout the past an hour. So I hope to see you guys in person on this coming Saturday in our ET office in Symphony Square. So I think we'll end the session for tonight. I hope you guys have a very happy week ahead, and also for our Muslim friend, happy Ramadan, and see you soon at our office in Saturday. All right. Thank you, everyone, and thank you.